What scares me about stablecoins on these lending platforms? Welcome back to my channel, everyone. On this channel, I talk about different ways to make money on your phone, creating passive income sources, making good sound investments, and some helpful tips here and there. So if you like this type of content, then hit that like button, subscribe, and click the bell notification so you get notified when I make videos in the future. Also, not a professional on this topic, so be sure to do your own research before making any moves on anything I talk about on my channel. I talk about stablecoins quite a bit on my channel, and I do believe it is a somewhat safe way to earn yield in the cryptocurrency space without taking too much risk. As with stablecoins, they are tied to the dollar, so there isn't the volatility you get in Bitcoin, Ethereum, or some of these other crypto assets. There are so many reasons to use this strategy to earn high yield in the crypto markets, but there are a few unknowns, and I'm going to cover those today. Outside of the point on these centralized lending platforms like Celsius, BlockFi, Outlet Finance, Voyager on the lending side, Nexo, and many more, you are still trusting a centralized service to control your stablecoins. And in the cryptocurrency space, not your keys, not your crypto. So just remember, you do not have full control. It's kind of like having your money in the bank. You really don't have control over that either. So for this model to work, to pay you these high yields, these lending platforms have to have fairly even lenders to borrowers. One of the things I look for on these lending platforms is that they have a fairly large amount of reserves to cover hacks, uneven lending to borrower ratios. So if a lot of people are trying to pull money out at one time and there's money lent out, there is money in the reserves to pay you out. So your money is not locked in these platforms, as well as any other unseen event that I haven't thought of. You never know in crypto. So many things change pretty rapidly. Really, the main point I'm making in this video is liquidity. Yes, this model is working great as we are in a bull market. So there are many people borrowing these crypto assets on these platforms to earn higher yield elsewhere. Therefore, they can pay us these high interest rates. Now, when we end up in a bear market, and yes, we will have a bear market, prices of anything just can't keep going up forever. I am very curious how this model will work, and if rates start dropping, which I believe these high rates will drop, as the demand from the borrowing side probably won't be as strong as it is now, how many people will be pulling their money out very quickly, and will we all be able to get our money out when we want? Now, don't get too scared. Your money is probably just as safe as it was before. The question is, can we pull it out? So this is the point I am focusing on and constantly reevaluating this as the market changes. And you know, I will keep you up to date on any changes on things that worry me on this channel. And of course, another thing, all of these lending platforms, once you change your USD, the dollar, into USDC, the stablecoin tied to the dollar, and put it on these lending platforms, there is no FDIC insurance, if that is something that matters to you. Now, as far as the liquidity issue, realistically, the same thing can happen to your banks. If there is a run on the banks and everybody is trying to take their money out at one time, well, I'm telling you, your money's not there, because banks don't really hold that much money. They lend out the same money over and over and over again. That's called fractional reserve lending. And realistically, they won't have that money just sitting in the bank for you to take out a large amount at one time, especially if everyone comes in trying to take it out at one time. Now, this realistically isn't that big of a deal with the major banks. Now, some of these crypto lending platforms do not have deep liquidity. With that being said, I like to spread my USDC over multiple different lending services that I feel are the safest. Now, I focus mainly on Celsius Network for many reasons. One, they are the most transparent lending platform in this space. They are well audited from an outside audit. Every single week you see their entire assets under management and everything financial given to you on their website. So you can track everything going on Celsius Network. Plus, they have the most assets under management of any of these lending platforms. Over $10 billion of assets under management. And they do hold about 20% of their assets in reserves for many of the reasons I talked about earlier in my video. Another platform that I do hold quite a bit of USDC on is Voyager Brokerage. From the lending side, they do partner with Celsius Network to help pay some of these high yields on some of their crypto assets on their brokerage. Now, they are also a publicly traded company, so we see their numbers come out every single quarter on their earnings call. And the most simple way to take advantage of the high yields in the cryptocurrency space, that's pretty much just the same as using any fintech bank account, is outlet finance. All you have to do is deposit your money. They do all the back-end work for you of buying USDC coin. It's pretty much just like a bank account, but giving you the high yields in the cryptocurrency space. Now, outlet isn't quite as transparent as we don't have their balance sheet, so I really don't know how much assets they have in reserves, even though the CEO did tell me they keep around 20% in reserves. We just don't know how much that is. So from the liquidity side, it does worry me a little bit, but I also keep close tabs on all of these lending platforms. I do as well use crypto.com very little, as I just have money sitting in USDC coin there, earning me 6% APY in a flex account, which I can pull out at any time, to purchase some cryptocurrencies when they do have a dip, as some of the cryptocurrencies I like to purchase are only on crypto.com without having to use a decentralized exchange. Sorry, I digress. That is getting off the topic of this video. Now, as you've heard me bring up USDC, this is my stablecoin of choice. There are so many stablecoins to pick from, but USDC is the most well-audited and regulated stablecoin in the US. Plus, it's just outside of the top 10 coins in market cap. As much as we don't like regulation in the cryptocurrency space, it is important for a stablecoin like this, doing everything a stablecoin does, to be regulated by the US. Now, if you wanted to start taking advantage of the high yields in this cryptocurrency space, I do have referral links to all the platforms I talked about in this video in the description below. If you sign up using my link, it gets you a bonus for following a couple simple rules, and I get a bonus too. It's kind of just a nice way to help out the channel. So if you're ready to move some of your money sitting in the bank earning you practically no interest to one of these lending platforms, then don't forget to give yourself a raise. I'll see you next time. A few videos popped up to your left and right. If one of those perk your interest, give it a click.